Want to go over an update and research for the 200K portfolio. This is my initial, I'm going to go over an initial Q4 setup. Not complete, but I want to show you where we are and what you could potentially trade starting on Monday in the 200K portfolio. I'm going to wait for a drawdown, but I want to show you what the biggest culprit is in this portfolio setup. We've gone through about a 24% drawdown, and it's just since the end of July. This portfolio setup has been doing well most of the year, and then just this spike down at the end of July. And the biggest culprit really is gold, and I'm going to show you that by removing the gold strategies from this portfolio setup. I'm going to scroll down here to gold, and I'm just going to dump all the gold algorithms. Let's see what happens when I do that. I'm going to get rid of that, and then I'm going to update. I've turned off the calculations. You can do that in the portfolio calculator to turn off the calculations, but then you have to save it to get it to update. So when I'm updating it, you'll see the latest results without gold in the 200K portfolio. So that added 16K to the drawdown. We're back to 32, 23,000 out of 32, and that right there is pretty good on its own. Your risk to worst case drawdown is about 9,000. And we talk a lot about the stock indexes, work a lot on the stock indexes. Our stock indexes are actually pretty strong, except for one strategy, NQ B Breakout. This is basically a process of cutting the losers. And when I cut the NQ B Breakout strategy, we have really good results. I need to save this again to update the calculation. So just removing gold in one of our worst NASDAQ strategies gets us down to 46 strategies, reduces the drawdown almost in half. So twice our drawdown was responsible in gold, and that one NASDAQ strategy have just been the biggest setbacks in this setup. So if you take a look here, you're only down 527 in August, actually up in September, and the first trading day of October you're up. This is something you could trade. I'm working towards a variation of this, so you could trade any of these variations in the 200K portfolio if you want. I am working on a final revision, so this is just the initial things that I'm looking at. So stay with me on this. I'm going to show you all the details. You could wait for a drawdown as well. We're currently trading the 50K portfolio, and its risk to worst case drawdown is about 8,400. You could wait until there's a day. You could trade the 50K portfolio. You could wait until there is a time period when the risk to worst case drawdown is lower, maybe around 10K or 8 to 10K. You could wait. The bigger the drawdown, the longer it could take, because this has not done much the last 3 months. And so if this does cycle back into a very strong mode like it was in earlier this year, it may not draw down as much at certain times. But typically, 5K drawdowns are regular, 10K drawdowns, and then recently, 15K drawdowns are very regular. So this is a 46 strategy portfolio. What happens if we just dump let's just separate the commodities and the stock indexes. I have a separate spreadsheet for that. I separated this out into 200K, the stock indexes versus the commodities for the 200K portfolio that we were trading. And that's the final setup. I'm going to get the 200K separations between stock indexes and commodities. So this is just the stock indexes without NQ B Breakout. This strategy right here, one of the biggest culprits, 60-minute breakout NQ B. And if you just look at that, it's had a really profitable September with just the stock index. If you traded all the stock indexes without that, I know we started this setup on September the 9th, but this is just to show you that the culprit is not the stock indexes. Even though we talk a lot about the stock indexes and the chop in the stock indexes, the real culprit is the chop in the commodities. So you are pegging equity peaks with the stock indexes, and some of the strategies that we're trading now don't work so well historically. That's why you see bigger drawdowns in this time frame. But back to 2015, really back to this time frame, the worst case drawdown is right in this area of 25,000, and then starting in this time frame, which is, let's see, this time frame is around 2013, I believe, 2014. Very cyclical, nice, tight, fairly quick drawdown recoveries with just the stock indexes that we're currently trading in the portfolio minus the 60-minute breakout NQ B. So the stock indexes are the strength of the portfolio. We talk about coming up with a chopper type strategy. And this is in our stock index 27 portfolio. You see that here. This won't work right now because I've modified some of the drop down stuff, but I can go back. I'll go back in another video and show you the stock index portfolio and 50K portfolio are the strongest portfolios on the month that did not make worst case drawdown. So the stock indexes are strong. Commodities are weak. So let's look at the commodity setup separately. So for the commodities, this is what it looks like. Not too bad right here, going through a normal cyclical drawdown here, normal cyclical drawdown here, and then just sliced down in a very fast way. Gold was the biggest culprit, but in general, the commodities have not performed that well. You see $39,000 drawdown with just the commodities, and then if you add the NQB breakout, this is the one strategy we took out of the other spreadsheet for the stock index portfolio. So the worst NASDAQ strategy with the commodities. Let's take a look at the results. So $60,000 drawdown. This set of strategies is a $60,000 drawdown. You can tell that our worst case drawdown was $48,000 total, and so the other set of strategies are the strength. This set of strategies is the weakness. And if you take a look here, let's look at the drawdown curve with that. Just a parabolic move down. It's good to have this information to know the truth about what's working and what's not. I don't like the fact that our commodity strategies are doing so poorly. So one of the things you can do is you could just trade these stock indexes. Our stock index portfolio 27 did well. It's about $10,000, $11,000 away from first case drawdown. Or I have a final solution for you. I wouldn't call it a final solution, but this is what I have today. I don't like to make sweeping changes. I like to find the worst case commodities, the worst commodities, and the worst NASDAQ strategies. And I've done that in this setup. It's a 46 strategy setup instead of 57. And basically what we've done, I could make a long video and go into all kinds of details, but basically what we've done is we've removed 6 gold strategies, 1 NASDAQ strategy, 1 silver strategy, 2 crude oil strategies, and 1 soybean strategy. And that's 11 strategies. You get this setup right here. It's about $17,500 from a worst case drawdown. And so we on a day that, right now the 50K portfolio is $8,400 from a worst case drawdown. So it's near equity peaks. And it's been a strong portfolio with strategies like Cobra 3, E-mini S&P, NASDAQ, gap continuation NQ. And this one is about twice that much, 17.5K from a worst case drawdown on this 200K. So let's wait for a time period when this goes into a drawdown level where it's about 8 to 10K or 7 to 10K away from a worst case drawdown. So wait for it to go into about a 15 to around a 15K drawdown. If it goes into a 15K drawdown, we wait for that there. And in the meantime, I'm going to still study this setup, and I may have another revision to this while we're waiting. I'm going to do all the go back historically and look at all the back tests for the strategies in this portfolio setup, and maybe make some adjustments potentially. But right now, this is a portfolio that you could trade if you wanted to go ahead and jump in on this. You're just basically cutting the losers. You're cutting the worst losers and writing the winners, and that's what you do in trading. And you have to adjust. We had that 24% drawdown, and so this adds risk to it. And we trade with our best strategies. You have to add capital to your account or scale back and trade micros potentially to get back. Some of the best ways to do that are to trade the Cobra 3s. You could trade the 50K portfolio. I'm going to show you the 50K portfolio because it can have some pretty good years as well. The 50K portfolio can have, last year had about a 60K year, and then 3 years ago it had about a 70K year. This year it's only up about 30K, and so you could patiently work your way out of the drawdown with a smaller portfolio with micros, or wait for this one to go into a worst case drawdown. That's what we're doing, trading the 50K, trying to get some profits out of that. While we're waiting for this one to go into a worst case drawdown, I guess it's possible that this one could go into a run up and the 50K could go into a drawdown. But we're managing our risk, preserving capital right now, and this is a solution to have right now as of October 2nd. And I'm not recommending starting this officially, but you could. You can download this spreadsheet. I'll have a link for that. You know, when you get this video, I'll have it in the notes for this, the comments below, so you can trade this setup as well. Let's look at the drawdown curve on this, and you can see it did have a down August, and so I like the cyclical nature of this drawdown curve. The one thing you could do is, there's one other thing you could do with this, is to remove the Asia Gold 4. I didn't want to change. I've learned in the past not to make sweeping changes. We talked about commodities. You could just trade the stock indexes and not the commodities. But so this includes all the stock indexes from the previous 200K except for the NQ Breakout B, and then it includes a more selective list of commodities. Instead of making sweeping changes and saying I'm dumping everything commodity related, I'm scaling back some instead of going into sweeping changes on that. So removing some of the redundancies, we've removed 6 gold strategies. There was 10 gold strategies. Now we only have 4. Crude oil, we've removed 2. We have 6 crude oil strategies instead of 8. You could remove this Asia Gold 4 strategy. That's done poorly. I may have an Asia Gold 4 short update as well, but you know, to me, gold has it's weak right now, but it has the opportunity to move higher. And I hate to just remove gold completely and then it become the best market to trade. I've said it's the worst market in 2021 to hold as an asset and to trade, in my opinion, based on what I see. And I hate to just dump everything and for this market to just be the best performer. Things go in cycles. So what happens if you remove Asia Gold 4 though, if you don't want that overnight risk, if you just want to day trade gold? I'll show you the results here. This is updating. So here are the results. Your total profit over drawdown is less. Your total drawdown and current drawdown are about the same. And so you see it doesn't make a big difference. Any given strategy doesn't usually make a big difference. That NQ Breakout B did. This was a killer strategy, and so I hate that we had that. But we're moving forward from here, and this is what I wanted to share with you today. This is my weekend research for the 200K portfolio update.